Welcome back, everyone, to the Nifty Noon podcast. We're doing something a little different today. We're taking a deep dive into several recent editions of the Nifty Noon newsletter, late March, early April 2025. Those weeks.
Yeah, really interesting time those couple of weeks. A lot going on, a lot of news.
And the Nifty Noon newsletters, they captured so much. So our goal is to unpack some of the most significant developments. We're going to look at everything. We're going to talk about traditional finance, getting involved in the on-chain world. We're going to look at the markets, how they're reacting to, well, frankly, some pretty big economic policy shifts and some updates, some really cool updates coming out of crypto and NFT projects themselves.
Yeah. When you look at your collection of newsletters from this period, the sense of convergence just jumps out at you. You see established institutions starting to really lean in. The core crypto and NFT communities, they're evolving so rapidly. Really a fascinating snapshot of the space in motion.
So let's start with a development that I think might signal a pretty big step towards that mainstream adoption that everyone always talks about. Your April 2nd newsletter, it really focused on MasterCard. Their interest in stablecoins, payments, remittances, that kind of thing. This feels like they're getting serious, wouldn't you say?
Yeah, I think it's more than just casual exploration at this point. What's particularly interesting, the newsletter touched on this, was that there were discussions happening about MasterCard potentially building their own blockchain-based payments network. That would be huge.
It's huge.
I mean, we're talking about a top 20 global company by market cap, potentially enabling direct fiat to crypto transactions.
That would change everything.
And it just suggests a pretty fundamental belief in the technology and its future in finance.
Yeah, for sure. And it's not like MasterCard is just dipping their toes in the water here, right? I mean, the newsletter mentioned their existing work on things like the MetaMask MasterCard, right?
Exactly. That was a really interesting step, bridging that gap between, that traditional finance world and the crypto world. But this would be building their own network. I mean, that's a whole different level of commitment.
Yeah.
And it could really drive real world use cases beyond just trading, speculation, all that.
So we see a huge potential move toward integration with MasterCard. On the other hand, the market is reacting pretty significantly to some anticipated economic policy changes. Your newsletters from March 31st and April 3rd, they really detail how the market was responding both to the speculation and then the actual announcement of those tariffs that Donald Trump, he's calling them Liberation Day reciprocal tariffs.
Yeah, that's an example of how those macro factors, geopolitical events, they can really impact the crypto world.
For sure.
So March 31st, your newsletter highlighted all these rumors about tariffs, right? The suggestion that they could hit over $1.5 trillion worth of imports, automobiles, semiconductors, pharmaceuticals. I mean, those are huge industries.
Hugely disruptive.
Exactly. I mean, that level of potential disruption immediately introduces uncertainty. Investors, they don't like uncertainty.
And they showed it. The market responded. Both U.S. equities and crypto majors, things like Bitcoin, Ethereum, they took a dip, didn't they?
Yeah, I think that initial reaction on March 31st, it showed just how sensitive the markets are to, any hints of a trade conflict or, anything that might disrupt economic stability. And then when your April 3rd newsletter confirmed those tariffs, I mean, they were pretty sweeping. The market reacted even more strongly.
It's in your newsletter. Both the S&P 500 and Bitcoin, they both headed downwards after those announcements.
Yeah. And your newsletter made a really good point there. It pointed out that regulatory stability from the executive branch, it's crucial for market confidence. I mean, when major economic policies can change so quickly, just through an executive order, that makes investors nervous.
Understandably so. I mean, to add to that, the economic picture, your April 2nd newsletter, it had this estimate from the Federal Reserve Bank of Atlanta's GDP Now model.
Yeah.
And they were projecting a really significant negative growth, minus 3.7% for Q1 2025 in the U.S. So, there are already underlying concerns there, right?
Absolutely. The market was already jittery. And then you add those tariffs into the mix, it's no surprise things went south.
Now, in the midst of all that volatility, there's this interesting narrative that starts to emerge. And you highlighted this in your April 1st newsletter, the idea of Bitcoin becoming this safe haven asset.
I mean, it's really striking how Bitcoin held up during this period, especially compared to other parts of the crypto market. You mentioned in your newsletter the ETH-BTC trading pair. It hit multi-year lows. People were moving their crypto holdings into Bitcoin, looking for that security, that store of value.
I said they were running for the hills, and Bitcoin was their bunker.
That's a good way to put it. And it wasn't just, retail investors doing this. Your newsletter highlighted the growing institutional interest, particularly with BlackRock. I mean, they're not messing around.
BlackRock, that's serious business. Their CEO, Larry Fink, his annual letter to investors. You covered this in the April 1st newsletter. He was suggesting that if the U.S. doesn't get its debt under control, well, digital assets, things like Bitcoin, they could challenge the dollar's position as the world's reserve currency.
Yeah, that's a bold statement from someone like Fink.
No kidding.
It shows that even the most established players in the financial world, they're starting to recognize the potential of digital assets. And it also highlights the importance of responsible fiscal policy.
So Bitcoin might be a safe haven, but are there other cryptocurrencies poised to make a comeback? Your newsletter suggested that perhaps with a stable tariff policy and maybe some dovish interest rate cuts from the Fed, alternative coins, particularly Ethereum, might see resurgence.
Yeah, that's an interesting idea. I mean, during times of high uncertainty, people flock to Bitcoin. It's seen as this digital gold. But once things stabilize, investors might be more willing to take risks on those altcoins with, strong underlying technology and use cases, Ethereum being a prime example.
Before we move on, I want to remind everyone listening that if you're enjoying this deep dive into the Nifty Noon newsletters and want to stay ahead of the curve in the crypto and NFT space, be sure to subscribe at niftynoon.com.
Absolutely.
Okay, now let's talk about some other interesting developments from those newsletters. And I think it's worth touching on some of the drama surrounding the FDUSD stablecoin. That was in your April 4th newsletter. Justin Sun, he made some pretty serious claims about the solvency of First Digital Trust, the issuer of FDUSD, a stablecoin, by the way, that's heavily promoted by Binance.
Yeah, that was definitely a tense situation. Sun was basically saying there were loopholes in Hong Kong's trust licensing and financial risk management processes.
Big accusations. And of course, First Digital Trust, they hit back, right?
They did. They denied those claims pretty forcefully. They said the actual dispute was with TUSD, another stablecoin, not FDUSD. And they assured users that FDUSD was fully backed one-to-one with US dollars.
But this put Binance in a tough spot, right? They hold a lot of FDUSD.
Oh, absolutely. Binance has a huge FDUSD reserve. I mean, we're talking about something like $1.67 billion. So the stability of that stablecoin, it's really important for them.
And of course, we saw FDUSD briefly lose its peg, right? I mean, after Sun's allegations, it dropped pretty significantly.
Yeah, dipped down to 0.8816 at one point. That's a big move.
It's a big move for a stablecoin.
Yeah.
So people were getting nervous.
Understandably so. But it's interesting, it recovered pretty quickly. I mean, it was back up to around 0.99963 in no time. It seems like the market ultimately had more faith in First Digital Trust than in Justin Sun.
So a bit of a roller coaster ride there. But those newsletters, they weren't all about drama and market swings. There were a lot of positive developments, too. There was just this flurry of activity happening across the wider crypto and NFT landscape.
Yeah, the space just never stands still.
Let's talk about some of those other developments. In your April 2nd newsletter, you reported that Circle, one of the big stablecoin issuers, they filed for an IPO. They're working with JP Morgan and Citi. That's a big step.
Huge. I mean, that's mainstream recognition right there.
And then you had GameStop. They completed this. I mean, it was a huge stock offering, something like $1.5 billion, wasn't it?
Yeah, GameStop's always up to something interesting. While that wasn't directly crypto-related, it shows that there's a lot of investor appetite out there.
For sure. And in the NFT marketplace world, Bybit Web3, they announced they were shutting down their NFT marketplace. They closed their inscription marketplace and their IDO product pages, too. That was all on April 8th, and you had that in your April 2nd newsletter.
That's interesting. It suggests that maybe they're reevaluating their strategy in the Web3 space. The NFT marketplace world can be pretty competitive, and maybe they're deciding to focus their resources elsewhere.
And then there was the news about Eric and Donald Trump Jr. They're launching a Bitcoin mining venture. They're calling it American Bitcoin. They want to become a major miner and build a Bitcoin reserve.
Yeah, so the Trumps are doubling down on Bitcoin.
Seems like it. And BlackRock, after Larry Fink's comments, they got regulatory approval in the UK to operate as a crypto asset firm. That was on April 2nd.
That's huge for them.
Right. They're making moves.
They need that regulatory approval if they want to expand their crypto offerings internationally. It's a key part of their global strategy.
And Grayscale, they're not slowing down either. They filed an S3 for a digital large cap fund ETF. That was April 2nd as well. They're pushing hard into these accessible crypto investment products.
It makes sense. ETFs, they're a familiar structure for a lot of investors. Grayscale wants to make it easy for people to get exposure to the crypto market.
Meanwhile, Binance announced they were suspending spot trading of USDT pairs in the European Economic Area. That's to comply with those upcoming MiCA regulations.
Yeah.
It was in the April 2nd newsletter.
MiCA, that's a big one.
It's huge.
Binance, they had to make some pretty significant operational adjustments to comply. It shows how the regulatory landscape is evolving globally and exchanges have to adapt.
Absolutely. And on the U.S. regulatory front, there was some good news. The Stable Act, it aims to create a clearer framework for stablecoins. Well, it passed a committee vote on April 4th.
That's a step in the right direction. The stablecoin industry, they've been calling for more regulatory clarity.
And then we had the Senate approving Paul Atkins to lead the SEC. He's considered to be pretty crypto-friendly. That was on April 4th, too.
Could be a good sign for the industry. We'll have to see what his approach is. But, you know, a crypto-friendly SEC chair, that could create a much more supportive environment for innovation in the U.S.
Definitely. And speaking of innovation, PayPal, they added support for Solana and Chainlink for their U.S. customers. That was in your April 3rd newsletter. So now PayPal users can buy, sell, hold, SOL, and link right on the platform.
That's huge for adoption.
For sure.
PayPal, they've got this massive user base. So integrating those altcoins, it really brings them into the mainstream.
And then there were reports that Fidelity, they're looking into adding crypto to their retirement plans. This could be a game changer, couldn't it?
Absolutely. If people can start including crypto in their 401ks, that would be huge for long-term adoption. It would be a signal that crypto is a legitimate asset class, you know, something you can hold for the long haul.
That April 3rd newsletter was packed. It also had the news about Drip Labs getting acquired by Jupiter Exchange on Solana. That's a sign of consolidation in the DeFi space.
Exactly. You're seeing these bigger protocols like Jupiter, they're expanding by acquiring smaller projects like Drip Labs. It's a way to grow their capabilities and their user base.
And there was more good news for U.S. investors. CoinList announced their return to the U.S. market. They had to pull out for a while because of regulatory uncertainties, but they're back.
That's good news for anyone who wants to get involved in those early-stage crypto projects. CoinList, they're a really reputable platform for token sales and early-stage investments.
And Jack Dorsey, he made some headlines. He said Square is working on enabling Bitcoin payments on their terminals. That was on April 4th.
Imagine that.
I know.
Paying for your coffee with Bitcoin at your local coffee shop.
That would be amazing. It would really make Bitcoin usable for everyday transactions.
A true peer-to-peer electronic cash system.
And then in your April 4th newsletter, you mentioned that the SEC acknowledged a filing for a Solana ETF. So after the approval of Bitcoin ETFs, it looks like we might be seeing a broader range of crypto ETFs coming to the U.S. market.
Yeah, that's a big deal. ETFs, they're a really accessible way for both institutional and retail investors to get exposure to different assets. And having more crypto ETFs available, that would be a really positive sign for the industry.
In Coinbase Derivatives, they filed to self-certify XRP futures. So that would add another big digital asset to their derivatives platform.
Yeah, more options for traders. Derivatives, they're a way to hedge your bets and manage risk. So having XRP futures available on a regulated platform, it gives investors more tools to work with.
Okay, last but not least, let's talk about NFTs. We saw some big changes in the NFT marketplace landscape. Bybit Web3, they discontinued their NFT marketplace, and X2I2 announced it was shutting down too. That was all in those early April newsletters. It seems like the NFT market's going through a bit of a shakeup.
Yeah, I think there's a lot of consolidation happening in the NFT space right now. It's a competitive market, and maybe some of these smaller players are struggling to keep up.
But even with those marketplace changes, there's still so much innovation happening within NFT projects themselves. You had some great updates in those newsletters. The Doodles co-founders, they were teasing a new project. Taproot Wizards completed their distribution. And Klaynos, they got nominated for a Webby Award.
Yeah, it's exciting to see the NFT space. It's so dynamic, and there's constantly new things popping up. It's not just about buying and selling JPEGs. It's about art, collectibles, and even new forms of digital ownership.
I love that. Okay, so we've covered a ton of ground here today. We've seen how traditional finance is getting involved with blockchain, how the market is reacting to economic policies, and all the cool stuff that's happening in the crypto and NFT communities. It's incredible how interconnected everything is, wouldn't you say?
Absolutely. It's a really exciting time to be following this space.
For sure. And a reminder to everyone listening, if you want to stay on top of all these developments, be sure to visit niftynoon.com.
You won't regret it. There's so much to learn, and it's changing every day.
Thank you so much for taking this deep dive with us today on the Nifty Noon podcast.